Futures this morning have reversed course. We are looking at a rally across the board right here. Take a look. The Dow Industrials right now up 110. The Nasdaq is up 107, and the S&P higher by 3.5 after a winning week last week. And, of course, double-digit gains for the major averages since the end of March. Interest rates this morning have been spiking, but take a look. The Federal Reserve left interest rates unchanged last week during Kevin Warsh's first policy meeting as chair. This morning, the yield on the 10-year is up better than 3 basis points, sitting at a level of 4.49%, just below 4.5%. The policymakers' dot plot revealed 9 out of 18 Fed officials are anticipating a rate increase later this year. Investors are awaiting key inflation data this week. Meanwhile, the Fed's preferred inflation gauge, the May PCE index, is out Thursday, with expectations of a gain of 0.5% month to month and a gain of 4% year over year. Also out this week, the final read of first quarter GDP coming out on Thursday. Expectations call for growth of 1.6% for GDP in the final read for the first quarter. Joining me now is Morgan Stanley Senior Vice President of Investments, Jim Lacamp. Jim, great to see you this morning. Thank you so much for joining us to talk about so much breaking news. Number one, Keir Starmer, the Prime Minister of the UK, resigning. Number two, Alan Greenspan, 100 years old, passed away today. And, of course, number three, we've got a war in Iran with talks underway in Switzerland. What's most important to you in terms of the impact on markets and investing?
Great question, but I think it's the straits. And if the straits are open, that really sets a more clear path for the markets. And let's just look at the markets and the action of the markets. There's a lot to be worried about. It's kind of a rodeo bull, given that it can be hard to kind of stay with, given the news flow. But the NASDAQ is still above its 50-day moving average. Semiconductors are hitting new highs. None of the trends have been broken. Earnings are strong. CapEx is strong. Productivity is high. We have a pro-business administration with this big, beautiful bill that has greased the skids better for American business, and deregulation is kicking in. So there's a lot to like about this market. Now, it's not cheap, and there is going to be volatility, and we have clear concerns. I mentioned the straits. This is creating a three-headed monster that the market's worried about, because higher oil prices can push interest rates higher, and that pushes the dollar higher, none of which are particularly good for the market. But Wall Street's always playing a game of what do we think today versus what we thought yesterday, and today we think the straits are going to be opened. That's something to watch, but until that really changes, I think the market looks okay here.
So when you look at where the money has been in this market, obviously tech has been leading things. What's your take on that? Because you've got SpaceX, one of the biggest stories on Wall Street. The stock was down in the last 2 full trading days, but it is still up 37% from the IPO on June 12th at NASDAQ. SpaceX's market cap surpassing Amazon, now at $2.4 trillion. We've got Anthropic and OpenAI right behind SpaceX going public. SpaceX announced a senior notes offering and disclosed roughly $100.8 billion in cash and cash equivalents. We're still waiting on earnings, but this is enormous financial firepower. No wonder there's incredible interest in the stock. What do you make of all the money dominated in tech and AI-related names like SpaceX?
Well, I think it's really healthy, Maria, when you look at what the other technology stocks did after this IPO. And the reason is a lot of people were very worried that that was going to suck liquidity out of the markets, that they were going to have to sell all the leaders, the AI infrastructure companies, the semiconductor companies, to buy SpaceX and to buy Anthropic. And maybe there is going to be some of that, but a lot of those stocks are still hitting new highs. And we've got earnings coming out from Micron this week. They're going to tell us how tight the demand is for memory chips. And you just saw the news this morning with Chevron and Microsoft. This spend is still gigantic. People forget that what we do here in America is we innovate. And that means that technology is one of our leading sectors, has been our leading sector for the economy for quite some time. And as long as that's still going on, and right now it's somewhat on fire, not to mention robotics, not to mention space.
Yeah.
There's all sorts of angles to technology that the U.S. is firing on all cylinders with right now.
We got $7.9 trillion in money market assets. Is it your thinking that eventually that $7 trillion or bulk of it goes into the stock market, Jim, real quick?
Yeah, because I think a lot of people are worried about the bond market, and they see that the stock market has continued to find buyers on every dip. I think that continues unless interest rates and oil prices run away from us, and that's what we need to watch.
Jim, great to talk with you. Thanks so much. Jim Lacamp, Morgan Stanley. We'll be right back.